Hello everyone, welcome back to my channel. So this video marks the end of the week number 46 in this road to 100k realized return challenge, and it's been a week which started, I would say, quite positively. Investors were a bit under the expectation that some sort of deal would come out of the negotiations in London between the US and China when it comes to their trade war negotiations. But apparently, just a framework or less than an agreement was settled, and it became something that the respective presidents need to approve. But under that expectation, the markets pulled up, and they were positive at the beginning of the week. Also, some data that came as the week developed also was relatively favorable and pushed the market up. However, by Thursday, things stagnated a little bit, as you can see right here. Even though, of course, the inflation came a bit softer than was expected, and uh, but the biggest talking point here is this big gap that occurred when it came on the news that Israel had launched a strike against Iran's nuclear capabilities and infrastructure. And even though when the markets opened, they staged a bit of a comeback right around here, but then later in the day, and again when this huge downswing came about, it was a time in which it was announced that Iran was already striking back, counterattacking the offensive of Israel earlier in the day, and so this pushed oil prices up in a big way. Refugee assets, refuge assets such as gold went up, and as a consequence of that, the environment became pretty much risk off, and that's why we managed to finish the week lower than when we began. However, as things stand at the moment, we managed to collect, even though there was never a point in time in which the stock, the QQQ stock, finished the day at or above $535, which is our cost basis for these shares. There was a point in time in which it went above intraday, but there was never a position in which our calls were close to be assigned, and so there was never a risk of us losing the shares. Nevertheless, we managed to accrue a fair bit amount of premium, and as you can see here, assuming all the positions that were closed this week, which were these these 6 contracts that were expired today, or last Friday, yesterday. So considering all this amount, so this amount is $17, as well as the positions that we closed during this week. And I forgot also to put in here these cash covered puts that we closed during the week as well. So these 2 contracts and these 4 contracts. And so basically this week we managed to accrue only wins, and we managed to accrue a little bit over 400 euros, $400 in profit by the time all these positions fell away. Now, of course, we have still this position here, which is a big one, because these are 24 contracts, but the calls are still alive. As you can see here, they are still yet to be closed. And as things stand at the moment, we are going to have to wait until the end of the week, because we sold these calls at 2 cents a piece, and there's no sense for us to close down the position because we would have to pay 1 cent in the to close it and to buy it back, and then we have a huge commission because these are 24 contracts, and as you can see, even if we let this expire worthless, this would be only a profit of about $31, so it's not that much. So if we pay another round of commissions just above, like this, our profit will be super low, and so there's no point in doing so. But as things stands at the moment, we are in a good place. We have when it comes to Pfizer also had and unlike the previous times, it had a very positive week, as you can see, and it was a very wise decision because that we did not follow up on our intentions last weekend, because last weekend I mentioned that since we have, and I'm going to show you here the 6-month graph, or going a little bit further away, 1 year, as you can see, there's some sort of resistance, or at the time it was a resistance around here, around the 24.50, and it was my intention to sell these calls, these 24 contracts that are currently outstanding, to sell the 24 contracts with a strike price of 24.50, on the basis that since this was a resistance, we should not get close to it over the course of a single week. However, my assumptions were proven exactly wrong, because as soon as the stock, as trading opened on Monday, the stock began to rise, and rise quickly towards that target, and then became too risky to sell the calls with a strike price of 24.50, and we chose to go the safe route and sell with a strike price of 26, even though of course we had to stretch it for 2 weeks and get less premium in return. But it ended up being a wise choice, because as you can see here, there were a lot of moments in time in which the stock came close to 25, and in the end it closed the week at 24.54. So if we had sold those calls, we would have been forced to sell 2400 shares at 24.50, and this is below our cost basis. We cannot afford to do that, and so we might as well keep the shares, have less premium in return, and for the time being continue to wait, either if we buy more shares through selling puts, or if the price continues to rise and we ended up being in a position in which we will be able to sell the shares by calls being assigned. And so it was a momentous decision that we did on the spot, and it ended up being the right one, selling the calls at 20 with a strike price of 26. And so it was a good, I think this weekend came in a great timing, because this will allow the market to cool down and not be as afraid, barring any future developments that happen over the weekend when it comes to the conflict between Iran and Israel. But the weekend came in a good timing to allow things to cool down a little bit in the market, in the investors' minds, and see if markets continue to rise as they've been over the last 2 months. So the plan for next week is basically doing the same. We are within striking distance in terms of our shares of QQQ. We are within striking distance of our cost basis, which is 535. So I expect that we will be able to sell and continue to do it just as we did and up until now, during this past week, to sell calls at the strike price we want to break even, at least the 525. And then when it comes to Pfizer, we will continue to sell more puts. We have the buying power available, and so at the moment, and assuming, which is not the correct assumption, but assuming these prices will remain the same, we will probably settle again for a pretty safe bet when it comes to selling puts, probably here the 23.5 or even the 24, but the 24 I think it's too close to the current price. If we have 2 days of markets coming down, it's enough for the shares to being assigned to us and being forced to buy the shares. So I believe that the safest bet is to go again for the 23.5 put options. And keep in mind, we only have 24 contracts, call contracts in place, so we can sell 6 more. And at the moment, and assuming this option chain would be similar to the one it will open the market on the 15th, on the June the 16th, I assume that we will have to be forced, given this current option chain, and the premiums will be further down because a whole weekend have passed. We'll have to settle again for a 2-week call, and for example try to sell this one over here at 26 again and see what happens. It's not an optimistic situation to be in because we prefer to sell a little bit higher, but it remains a possibility to go for the 3-week option. But the premiums are not that significant at the moment, and yeah, we will have to see what the option chains are for the different maturities, 1 week, 2 weeks, 3 weeks, and make a decision at the time. But yeah, and also one good development that we received some dividends on the Pfizer. They were paid yesterday. It was around, in our case, given the shares we have, it was a little bit under €1,000 net, so it was also some profit for us. So yeah, this is it, and we will reconvene on Monday to see how the trades went. Pay attention that next week is going to be a big week. We have the Federal Reserve meeting. Some decisions a decision will be made on the interest rate, and even though the market is largely expect that rates will continue to be the same, we have to keep in mind that inflation came softer than expected, and there is some signs of weakness in the labor market, and these two factors may be conducive to the Fed surprising the market with a rate cut. But even though that would be largely unexpected, I expect that if that happens, the market would rise because it would be a positive surprise for them. But with that decision, more volatility will come into play, and so we will have to be very cautious when it comes to our trades. But I assume that as long as we keep our strike prices for the QQQ at the break-even point, at least we'll be pretty safe, and we remain with our strike prices above the acquisition price for Pfizer. We also remain safe as well. So for the time being, this is all. Feel free to leave your comments in the comment section down below, and I'm also available on LinkedIn in case you want to ask me any questions, and also of course feel free to like the video and subscribe to the channel, and yeah, I'll see you on Monday.